Hey everybody, hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for November 11th, 2024. I want to keep today's video brief, but I do have some closing thoughts I want to share. And I really like doing the bar by bar style. So I'm going to try to do that, but kind of scroll more quickly through it. But I think that makes more sense and will help explain things better that way. But it's Monday, so let's look at the weekly chart. I've been talking about this bull channel for a while now, and you can see we have several pushes up, maybe 3 or 4 pushes up, which makes me a little suspicious of this breakout, especially because of the two-sided trading through here. This was a very deep pullback, and if we just do the math really quickly, let's see, the market fell, we'll call it 605 points out of 700 points. What's 6 divided by 7? It's about an 85-86% pullback. And trends do not pull back 85%. Trading ranges and broad channels do, but trends do not, or at least strong trends. So we did rally here, but had a very deep pullback, and we started going sideways. Lots of overlap through here, confusion. We tried to get the bull breakout, and did here. Bulls broke out. We tested the breakout point. Now we're getting a second leg. What do you notice about the second leg? There's a couple of things. One is that it's just one bar. So price control for the bulls, good for the bulls, but also it's possible that it's a second leg trap. Maybe we're overall in a trading range and we're vacuuming up to resistance. Now, that does not mean I'm looking to sell right here, because we have a lot of bars above the moving average. The market is overall bullish. Every time we test the moving average or try to break below it, we find buyers. Here, fell below, and they bought. Here, they bought again. Here, they bought again. So, just because I'm suspicious, this might be a late leg, climactic, maybe we are in a trading range, that doesn't mean I'm selling the close of this bar. But I am hesitant to buy because we're far above the moving average, and we have a lot of bars sideways through here. Tight trading range possible, final flag. Trying to get the bull breakout, but last week overlaps a lot of bars to the left. Closed above them, good for the bulls, but now we need follow through. We know that for the most part, climaxes are followed by 1 to 3 bars sideways. Breakouts typically pull back or pause first. Daily chart, same idea, lots of bull bars, but lots of trading range price action to the left, and good bull bar here, but then smaller bar, even smaller bar. The bull body's getting smaller. Bulls will only buy this far above the moving average if there is momentum, if it stays above average in terms of bullishness. But in terms of buying up here with no momentum, now you're buying far above the average price for possibly average or sideways price action. And so that can cause a vacuum test back down to the moving average. And this is the daily chart. I talked about that a few times. I don't remember. Maybe I said it over here. Far above the moving average, we started to go sideways, and then we pulled back. Up here, far above the moving average, but then went sideways, pulled back. Same here, and might be the same here. But as far as going into today, in this environment, I'm not looking to sell, and I say that on the daily chart, I'm not necessarily looking to sell, but I'm also not looking to buy, which tells me I'm unsure, and it's probably a trading range. We might be in breakout mode. Yes, lots of bull bars, but again, momentum slowing down, body's getting smaller. And so as far as the overall context, we are more bullish. We're above the moving average. We have a lot of bull bars and momentum to the upside. So that means the first reversal down is probably going to fail. It's going to get bought. So probably buyers below the prior day's low. But as far as buying above Friday's high, I'm not so sure. So with all that, let me just mark that's the high of Friday. And if I call that the high of yesterday, whenever it's Monday, and I say yesterday, I'm referring to the prior trading day. So that would be Friday in this case. On the open, we had 3 bars sideways, lots of overlap. We gapped up, and you can think of gaps as breakouts, but it's worth looking at the Globex session to see what this gap was. Was it a tight channel, strong bull breakout? Was it a trading range, big up, big down, big up? It's always good to check and see what that is. And so the way I like to do that is the Globex 15-minute chart. So here's the open, and over here is Friday's close. So you can see the market gapped up, and then we went sideways for a lot of bars, but continued higher. But it's possible we have 1, 2, 3 pushes up with a climactic third leg, and then a bear leg. This bear breakout needs a second leg. You can argue the bulls need a second leg too, but it might be a late leg and we can get a deep pullback and possibly even a reversal. So I think probably sellers up here at breakout points, the bears are likely to get a second leg down. So that's my thoughts going into the day with the information from the Globex 15-minute chart. So with that, I think we need a second leg down. Then we get this, and the gap up was relatively small. I don't know the stat, but it's probably something like 80% of gaps. You can see the gap percentage change, 0.28%. It's a relatively small gap. And when the gap is small, it typically closes. So I don't know the stat, but maybe something like 70 or 80% of the time, this gap is going to close. So I think a lot of traders think we're going to test the close of yesterday. Breakout mode on the open, overlapping bars. We went down, we went up, we went down again. Bar 3, big enough bar, probably needs a second leg down. You have bulls trapped below bar 2. Bar 2 was an inside bar and not a strong stop order sell signal bar. Anybody who bought below 2 or did not sell below 2 is now trapped, and the market went far below that low. So this bear breakout is probably going to get a second leg down. You can even see bar 4 tested the low of bar 2, maybe to the tick, maybe missed it by a tick. The low is 60.39 and the high is 60.38 and 3/4. So bar 4 rallied just 1 tick below that low and then sold off. So trap traders here bailing out this 3 and 4. This bear breakout probably going to get a second leg down, but lots of trading range price action. Big up, big down, big up, big down. Big confusion, buy low, sell high, scalp. Lots of bear bars, maybe a 5-bar bear micro channel, but not very strong, but still strong enough for a second leg down. When it's a trading range environment, second legs can be delayed after deep pullbacks. So as far as here, I'm not necessarily looking to sell down here, but maybe a deep pullback for a second leg down. Bar 8, we broke below bar 4 to a new low of the day. Now we might have 3 pushes down, 1, 4, and 7, but fairly tight bear channel. First reversal probably going to be minor. Bar 9 rallied above the prior bar, but minor reversal, sellers above, micro channel, probably going at least one tick below bar 8 for a second leg down. And that's what we did on bar 11, maybe a couple ticks below 8, but support down here. Bulls defending the gap. Maybe it's around a 50% pullback of the rally. So we're finding support in here. So I think bar 11, a second reversal, bull bar closing on its high. I think bears have to get out above 11, and we may have had 3 pushes down. We might get 10 bars and 2 legs sideways to up here. Now, when I say 3 pushes down, this is minor, so more clear on a lower time frame, maybe a 2-minute chart. So we might get the 10 bars and 2 legs on that chart. So the correction might be less than 10 bars and 2 legs on the 5-minute because this is minor, which means it's more inferred on this chart. Bull breakout 13, follow through 14. A little bit of a surprise, but sort of Brad would call this an emotional breakout. Whenever you have a big breakout bar, trend bar, and it's a trading range environment, imagine if you stepped away from the computer here and then you came back and saw this. You might be thinking, oh my gosh, I got to get long. The market's racing up without me. And it traps traders into buying up here at the top of a trading range. We have to keep in mind that this sell-off needs a second leg down, even if it gets a deep pullback. So this could simply be a pullback before a second leg down. However, now the rally from 11 to 14 needs a second leg up. And this might get a deep pullback before a second leg. This is what creates confusion. Big down, big up. It also creates triangles. We start getting lower highs and higher lows. So at this point, we have trapped traders down here. Bar 12 was a weak stop order, but the market rallied far above it, and that creates support at the bar 12 high. 15, big bear bar, 2-bar reversal, but lots of overlap. Yes, bear breakout, but outside bar, middle of a trading range, maybe low in the trading range. And what did I just say? This needs a second leg up, and the bar 12 high becomes support. So probably traders buying here for a second leg up. And that's what we got. The bulls want to get one tick above 15, and they did not quite get there. Now we have a second reversal on bar 19. First reversal on 15, second reversal 19. It's also nested. Micro double top here, double top with bar 3 over here. So some traders might sell below 19, weak signal bar, but context fairly good. One concern for the bears here might be that every bar today has closed above the moving average, and it's a very bullish environment overall. High 120, but probably sellers above. We didn't trigger the buy. No one was interested in buying up here, and we have to go lower to find buyers. Now we have a 3-bar micro channel, and the bears still need a second leg down. So we start selling off. Bad buy above 22. Traders sold it. Minor reversal. Now we have a tight channel going down. This will probably get its own second leg. 25, reversal bar. Traders might exit above that bar. It's a second reversal. Might be getting low in the range. And then 25, 26 rallied, but bad follow through. Might get a small second leg, but overall, this bear breakout is bigger than this bull breakout. So while this might get a brief second leg, this one will also probably get a second leg, as well as this one over here. The bull's trying to get a second leg. Bar 30 might be that second leg, retesting the bar 26 close. Bulls buy the close here, get trapped, disappointed, hoping to get out of break even. So buy the close bulls, probably getting out of longs on bar 30, which creates resistance. Then we reverse down a second time. So now there's a stop order sell below 31. Reasonable for a second leg down. Market's in breakout mode. It's a triangle. You can call it a tight trading range. And then the bears trying to get a bear breakout. The downside breakout looks like it's succeeding on 34. This might be a leg count reset because we're in breakout mode, triangle, we're getting a bear breakout. Market often comes back and tests the midpoint of the triangle, but if it doesn't start to pull back, more and more traders will start to sell, thinking that we're not going back up here. So bear breakout and then follow through. What happened here? 33, not a very strong stop order sell signal bar. Probably more traders buying below it. A lot of trading range price action. Again, weak signal bar. And then they're trapped on 34, which creates resistance here at the 33 low. So 35 retests it, sells off. That's a low one on a smaller time frame. 36, does 36 look like it's going to reverse this bear breakout? Probably not. Probably sellers above. 37, rallying. Maybe bears get out above it. Maybe we rallied on 35, sold off, rallied on 37, second reversal implied. So maybe bears put a stop above 37, but look what happened. It did not trigger the buy. That's a sign of strength by the bears. Traders will sell below 37, they'll sell below 38, they'll sell below 36. Think about it. If a bull bought the close of 37, front running the buy, they're trapped on 38, and maybe they use a tight stop below 36. So if these stops here get run, there's fuel. Bulls are selling, bears are selling, and we start going lower. Another bear breakout that needs a second leg. It's always in short. It's probably always in short on 34 or 35. Bear breakout and follow through. But it is breakout mode. It's not all that clear. And we're getting low in the trading range. It does help to know certain stats, like there's something like an 80 or 90% chance we break out of the 18 bar range. Also knowing the reversals are common at bar 18, and we had a bar 18 reversal here, and today's range was relatively small. It wouldn't be crazy if the opening range doubled, and at a certain point you wonder, is it going to double to the downside or to the upside? And if it's going to double to the upside, the bulls have to do better than this. So a new bear breakout, sellers above 4 bar micro channel, testing another breakout point. I like to focus on stop orders. So look at bar 37. There's a stop order sell below the bar. Not very great or not a very good signal bar. Context makes sense. This needs a second leg down. This needs a second leg down. We're probably going at least one tick below 11. But as far as the signal bar goes, not very good. Bulls will buy below it. Bears will not sell below it. And traders get trapped on the downside breakout. That creates an imbalance. Now there is resistance at the 36 low, 37 low. And then that's what bar 41 was testing. But you can see sellers in this area probably getting a second leg down. And then we got a give up on 42, 43. 42, 43 look relatively strong, but what's the problem with them? There's a couple of things. Here's a major swing point. Yesterday, bar 77. Trying to break out below it, but not closing below it. So this could be a sell vacuum testing the bottom of a trading range. You also have to consider the day structure. Lots of trading range price action on the open. I said triangles often get retested, so the apex of this triangle is a test magnet. So we may get back up here and somewhere in this area later on in the day. The odds of this being a bear trend for the rest of the day, especially in the more bullish environment on the higher time frames, is low probability. And look to the left, big down, big up, big down, low in a trading range. In this area, probably better to only look to buy, even though there's acceleration. Another problem with this is we're getting the biggest bear bar in the sell-off. You could say the sell-off began here, here, here. However you look at it, we're maybe 20 or 30 bars, maybe even 40 bars into a sell-off. And whenever you get big bars, 20 or more bars into a trend, you got to be thinking this might be exhaustion. Yes, it might be a measuring gap, but we need follow through. And the day structure with all the trading range price action up here and over here does not support a bear trend here. Disappointing for the bears. This is still strong enough. We're probably going at least a little bit lower, and the bears will likely get a second leg. This reversal is minor. Low one short 46. Some traders will sell, going at least a little bit lower here. But big tails on this bar, we sold off. You can look all the way back here. Bear breakout, but pause bar here, sideways, climax, sideways, climax, sideways. These are climactic bear breakouts, and that damages the bear case. And then 48. 48 is a bar that traders likely, bears get out above it, and bulls will buy above it. If you've been watching me for any amount of time, you may have seen that I would call 48 a GTFO bar. I jokingly say that to remind myself, if I'm short for any reason, I gotta get out above 48. There's no reason to stay short above 48 when we've had consecutive sell climaxes. We might be low in a trading range, and we have a huge bull bar closing on its high with the moving average not too far above. So I think always in bulls can buy, always in bears get out. Bears don't let the buy trigger, might be a sign of strength. However, 48 trapped traders above 47. 47, not a strong stop order buy. Not a great stop order signal bar, but we got a bull breakout. That creates support at the high of 47. So 49 retests it, but probably support here. And 48 is strong enough for a second leg up, so traders buy the breakout point. We get a second leg. This is a breakout even on this time frame, even though there's a bear bar. No technical pullbacks, so now we have a 6 or 7 bar micro channel, probably going to get a second leg up. But it's confusing again. Big down, big up, probably going more sideways, and traders might look to buy a pullback rather than buy up here. So we start to go sideways. Bears looking for a second leg down, selling up here. Bulls looking for a second leg up, might be unwilling to buy up here, but they'll buy a deeper pullback. Two-legged pullback, but starting to go sideways, tight trading range, sort of confusing. Bulls want trend resumption here, but bad follow through, they're not getting it. More sideways, more triangle. So breakout direction might be 50-50. There's an argument for the bulls and the bears. But this was the most recent breakout. We're going sideways for 10 bars. Maybe we get a second leg to the upside, but for me personally, I'm not trading when the trading range is this tight. The bears trying to get downside breakouts, the bulls trying to get upside breakouts, both failing. But at some point, one side will give up and the other side will win. Again, it might be fairly close to 50-50 here, but because of the apex of the triangle up here and this bull breakout, I thought there might have been a slightly higher probability that we get the upside breakout. Bears try to break out, bad follow through. We went outside up, 78, but more bad follow through, continuing to go sideways into the close. Stop order trades today. In this environment, stop orders are not as great, not as ideal as limit orders because we had a lot of trading range price action up here and in here, but that does not mean there were no stop order trades. We had a weak sell-off, looks like a bear leg in a trading range down to the moving average. After a gap up, 3 pushes down, second reversal, bar 11, you could buy above 11. 2 or 3 pushes up to bar 19, double top, high in the trading range, also fractal. So let's look. Might be 3 pushes up from 9, 15, 19. 1, 2, 3. Or just 2 legs up, 1 pullback, 2. But in here, 16 rallied, then we sold off. 17 rallied, 17 paused, 18 rallied, 19. 2 or 3 legs up in here, lots of overlap. So reasons to sell below 19. I mentioned the sell above, or let me back up. 25 might have been a reasonable buy for a scalp, but bad follow through 27. Disappointed bulls exiting here, so there's a sell below 31, but very tight trading range. But okay to take a chance. Probably always in short 34, 35. Sell for any reason, and you can sell below bull bars, you can sell below bear bars, closing below their midpoint. But at a certain point, you got to be quick to get out when there's consecutive sell climaxes far from the moving average. So I think a good default exit is to just get out above a bull bar, closing above its midpoint, like 48. Stop order buy above 48, reasonable. Breakout and follow through 51, maybe you buy there, taking a chance. All through here, really not ideal for stop orders, and really not anything great for stop orders for the rest of the day. Limit order trades. Gap up, bad follow through, inside bar, probably more sellers above 2. Sellers above any of these bars because it's a micro channel, tight channel down. First reversal should fail, so sellers above for at least a scalp. And then the rally, buyers below, maybe here for a second leg up, and then back down, strong enough sell-off for sellers above bars. 4-bar micro channel to 22, sellers above, but it's fractal, so this was also a strong enough breakout for a second leg. Traders might not sell above 24, but maybe they sell above, traders might not sell above 25, but they might sell above 24 or 23, or wait for over here because this bull breakout was likely to get a second leg up, and it did here, but it was weak. Traders could sell above 29 or 30. Bear breakout, sellers above 36 and 35. In this case, we did not get here, but I did mention that breakout point test. Sellers there. Same here. Bad stop order buy 40, sellers above 45. Probably sellers above 47, but this one failed. You can see if you did sell above 47 and you were trapped on 48, the market gave you an opportunity to exit at break even on 49. Sorry about the drawing. So you sell above 48, you sell above 47. It's a bear bar, bad stop order, trapped on 48, retested on 49, and bears got out. Strong enough bull breakout for a second leg. First reversal should fail. 53, weak stop order sell, buyers below for a second leg. And all through here, because I'm keeping it more short today, I'm not going to go through every trade in here, but there's limit order trades all throughout here. Buyers below bars, sellers above bars. Traders are scalping, taking quick profits, buying low and selling high. Today was a bear trading range day. Even though it looks kind of bearish through here, I think it's really interesting when you look at it like this. Trading range up here. And trading range down here. So the majority of the day was spent going sideways. The bottom of the trading range in the beginning of the day became resistance. So the support at the beginning of the day became resistance at the end of the day. But it's a bear trading range day because we had an upper trading range and then a lower trading range, and the day closed below the open. Where do we go tomorrow? Bull breakout on the daily chart. Yes, I am suspicious because this might be a late leg and a climactic end of a trend that ends up converting into a trading range, but for now, I'm not selling below the doji. There's probably buyers below here. The bulls will likely get a second leg up. The problem is we don't know how deep the pullback will be, and it could be all the way down here to this breakout point. Also on a smaller time frame, this is a spike pullback channel, and the beginning of that channel is here. So this is also an area of interest for traders. But because of the trading range bar, there's probably sellers above today's high and buyers below the low, with a little bit more of a bullish bias. But we'll see, because the momentum, we start to go sideways, we can easily vacuum down to the moving average. Now, as far as closing thoughts for today, I want to keep this brief, but I thought it was interesting. I have a 9-month-old niece, and I see her all the time. And it's really amazing to just watch her grow. And it's funny because I think about the term baby steps, and you think about approaching something, anything that's difficult. Whenever you're having a hard time, so let me relate it to trading. If you're studying Al Brooks and he has a lot of material and it's really confusing and you don't understand much at first, or maybe you've been studying for a number of years, but it's still confusing. Whenever something is confusing, you can often break it down into a smaller step. So the reason I'm bringing this up is because the way that a baby learns, I think, is so fascinating. And I think the vast, I don't want to say all babies are the same, but it seems like a common thing here where my niece, her new favorite thing to do is to stand up. She cannot stand up on her own, but it doesn't matter where she is, if she's in her playpen or with her mom or next to a chair, a stool, she'll grab anything she can, in her crib, she'll grab whatever she can so that she can stand up. And all she wants to do is stand up all day, because that's something new that she discovered. And I think it's so funny because I think back to just a few months ago, watching her be able to put her own binky in her own mouth was so funny. It's so fascinating to see that. And now she can take her binky, put it in her mouth, and then stand up and not even think about how she has her binky in her mouth, because she mastered that. She understands it at a subconscious level. She can multitask. So what I think was funny is I also have a friend who just had a baby. He has a baby girl who is just maybe a month older than my niece. And he was saying the same thing. He's saying she's learning something. She's at this point where it seems like she's learning something new every day. And when they learn something new, they just stick with it. They obsess over it. They just want to, they learn how to stand. All they want to do is stand. They learn how to babble. All they want to do is babble. So the whole point with this is, I'm speaking for myself, but I think it's really beneficial to approach anything with baby steps and to think about how babies approach things. And their progress looks really slow because they might stick with one thing for an entire day or an entire week. But, anyone who's familiar, who has kids or family members that are young, the first year goes so quickly. They grow so much. You think about how they're growing. First of all, they're resting all the time. They're sleeping all the time. So that's the importance of rest and recovery. But also, they're taking usually just one new idea at a time and obsessing over it and just really focusing on that one thing. So if I can go back to my past self, when I first got into studying Al Brooks, I would beg myself to just study one thing at a time. You don't have to read the entire book series through. You don't have to take the entire video course. And there's benefits in doing that. So maybe I'm a little biased with my own journey on this. But looking back, I wish I could tell myself, just take one idea and really, breakouts and second legs. Just focus on that, stop orders. And don't move on until you really understand it. And if you don't understand it, break it down into smaller steps, make it more simple. Feel free to ask me questions. I'm happy to help. This is why I make these videos. I want to make videos for, I imagine that I'm putting out videos for my past self. I didn't have this resource when I was first starting. I just had the books, and I had one friend that, we used to study together in college. So please feel free to ask me questions. I encourage you to take baby steps, focus on the most important things, breakouts and second legs, the market cycle, always in, stop orders. And if you understand all those things, there's really no limit. There's nothing you cannot do with really understanding those few things. All right, that's all the time I have for today. Thanks everybody for watching, and I hope everyone has a good night.